Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis, and joining me is investment analyst Cristina Parthenido. We'll be discussing the upcoming FOMC meeting and the potential reaction in the dollar. So Cristina, last week the Bank of Canada was the first major central bank to reduce stimulus. Is the Fed likely to follow suit? What do you think we'll hear from policymakers when they conclude their two-day policy review on Wednesday?
Hi, Maria. Well, the Fed has been very clear that monetary policy in the U.S. will remain stable. Interest rates will not change before 2024. And at the beginning, that statement was in doubt, and investors were afraid that inflationary pressures will force the bank to break its promise and tighten policy before 2024, and that consequently pushed U.S. Treasury yields sharply higher. But now we can see that the 10-year Treasury yield is on a downtrend, which is a sign that the Fed has likely managed to convince markets that monetary easing will not happen earlier than initially promised. So if the Fed was to plot its tightening plans at this meeting, that would reduce its credibility. Of course, the cut of bond purchases from Bank of Canada last week is currently questioning what keeps the Fed behind. Probably the answer is Canada managed to resume a bigger answer of the labor slack. But on the other hand, the U.S. has a brighter economic outlook because of the past vaccine program in the country. On Thursday, the annualized GDP growth figure for the first quarter is expected to jump to 6.1% from 4.3% previously. And on Friday, the core PCE inflation index and the personal income and consumption figures for March are also expected to advance. So the data reflect a growing economy, but looking at the unemployment rate, the country hasn't reached full employment conditions yet. And Powell admitted a few weeks ago that substantial risks remain in the background, although economic conditions have improved significantly. So probably Powell will stick to his plan at this meeting. However, it's worthy to know that the Fed will start cutting its bond purchases before raising interest rates. So bond tapering is expected to start before 2024. But this week, Powell will likely stick to his plans and keep the bond tapering details for himself for now. So the policy statement could highlight the progress in the economy, but in terms of policy, it will keep the same guidance. Definitely, the press conference will be more challenging. Powell will likely get a lot of questions about whether the Fed is planning to follow the Bank of Canada's steps anytime soon. And at this point, investors will test his resilience. Though personally, I think the Fed will try to avoid any tightening words this week. Perhaps we may get more updates about the tapering process during the June's meeting when the Fed will release its new economic projections.
Okay, so if Powell does indeed stick to the current script, what reaction are we likely to see in the dollar?
Well, currently the bond tapering scenario is not largely priced in. So if the Fed sticks to its plan, it may not be a very big surprise for markets, and the dollar may not reverse sharply to the downside. Now, the interesting part of the meeting could be if the Fed suddenly reveals some details about its tightening plans or signals some flexibility in the program this year. That could boost the dollar, although I think that the Fed would like to have a smooth transition to the next monetary phase and prepare markets before announcing its final decision. In the bearish scenario now, if the Fed wants to extend the dollar sell-off, it must sound more dovish and highlight the importance of an accommodative policy and show willingness to add more stimulus, which I think that is the less likely scenario for now.
Cristina, thanks so much. And thanks for joining us at XM.com.